Okay, so now we have our income statement, and the next financial statement we're going to make is going to be the statement of retained earnings. Retained earnings, to put it as succinctly as I can, we start with our beginning range of retained earnings. That means beginning for the time frame, because like the income statement is for a time frame, a specified time, plus my net income for that specified time, minus any dividends that have been paid out in that specific time, which will equal my ending retained earnings for that specific time. So come over here, say statement of retained earnings. And the period of time is the same as this one. So I say beginning, well, beginning of the 2 months is the same thing as saying the beginning of those 2 months would be November 1st, 2017. So that would be the first day of the 2-month time frame ended December 31st, 2017. So retained earnings for November 1st, 2017. Well, if you go back at the chapter and look, this is a brand new company. A brand new company, by definition, as being brand new, it cannot have anything in retained earnings. You can't retain earnings you haven't made yet. So the answer is 0 to this because it's a new company. If this were a company that was already in existence, I would use the prior time frame's ending balance. Like in January for this company, whatever my ending balance for December 31st would be my beginning balance for January 1st. It would roll over. But because it's a brand new organization, I'm going to have a 0 balance in my beginning retained earnings. So beginning retained earnings plus net income. So net income. What is my net income? Well, I just found that just a minute ago, right over here. I can just go ahead and reference it from the income statement. My net income is 7105. I'm going to add that because it's net income. If there were a net loss, it would be subtracted, which should make some sense because revenues and expenses are part of equity. And so if I lose money, my equity goes down. If I make money, my equity goes up. Now I'm going to add net income. Technically speaking, I didn't type it on there, but technically speaking, if I had a net loss, I would subtract a net loss. Next thing is my dividends. I'm going to go find my dividends, my worksheet here. Again, I'm going to take my adjusted balance. There was an adjustment to it, but at 4,000. But I'm going to need that to be a negative number because I'm going to subtract that. Okay. Beginning retained earnings plus net income minus dividends. Now I can find the total change in retained earnings. I call it that because it could be up, it could be down. It depends on which one of these is greater. In this case, my net income is greater, so it will be an increase. My change in retained earnings. So now my December 31st, 2017 retained earnings. I'm going to take the beginning balance plus or minus my change, in this case plus my change. So my ending balance for retained earnings is 3105. I'm going to go ahead and highlight these in the same color so you can see where this number comes from. The book draws an arrow, which is great too. But just realize that's those two numbers. You can't make the statement of retained earnings without figuring out what the net income is. Now you don't necessarily have to make the whole statement, but you definitely have to at least know what it is, or else you can't really make the statement in the first place. So it's the statement of retained earnings. I'll do one more video for the statement of for the balance sheet, for the balance sheet segment.